Everybody out there, anybody that has watched my work since the very, very beginning, so we're talking about years and years now, knows that I have never done 2 almost back-to-back urgent videos in a row. I'm getting goosebumps. The reason why this is happening is because everything is unfolding right now. So if this doesn't tell you how many things are heating up and how close we are, I really frankly don't know. But you know, on Wednesday, I told you that, and my mother, okay, I told you so, gold was breaking out, and here we go, we moved $40 in the matter of 2 days because it broke above that key level, and we're going to talk all about that. But the big question that I always get is, what kind of gold do I buy for myself? And today I'm going to show you, and guess what? I'm even going to show you why. Coming up. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service gold and silver physical precious metals dealer. But way more than that, as you guys know, I've been in these markets on some level since 1964 when I was 10 years old. And I've done videos in the past that have said, just before the crash, and tried to show you what it looked like when that crash was coming near. And everything that I have been seeing has been indicating that we are somewhere just before the crash. Stock markets are they're not even zooming. I mean, they were only up about with under 1% yesterday. Yes, they were making new highs thanks to Mario Draghi and our own Federal Reserve talking about all the free money drugs that they could possibly need. But we already know that they haven't been as effective. And now even some in mainstream media like, UBS is talking about the fact that if they do lower the rates and inject more, lower the rates in July, which is the most likely outcome in this country, that they don't think it's going to do a whole lot more for the stock market. And I should actually show you this. I'm sorry, I'm rushing a little bit because, getting ready for this morning. But it is really about more money, more free paper money, which of course reduces its value even more. And the stock market, they admit, is so severely overbought. Levels that they saw in early 18 before this whole thing started, the market started to break down. Overbought is an RSI, which is just a technical indicator. Overbought is above 70. You've got the Dow Industrials at 96, you've got the S&P 500 at 95, and you've got the NASDAQ 100 at 92. So that is extremely overbought. This market is fragile, fragile, fragile. And at the same time that you're seeing stocks go up, 1%-ish or less, guess what? The spot market in gold broke out, just like we talked about on Wednesday. So you can see where that's happened. But I want to show you the bigger picture of this, because now that we've come to conclusion on that one cup that started in 2018, now let me show you where the price is most likely to go technically, and short term, and then even a little bit longer term when we break out of the big cup that started back in 2011. Can you see this? Because there's a gap here. And I've shown you gaps in the past. And what a gap is, it's where anything can be gold. In this case, it's spot gold, but it could be a stock or interest rates. It can be anything. Where it closes one day at one level and then the next morning it opens at another level, either gapping up or gapping down. In gold's case, all that gap. That means that, is there a problem, Megan?
OBS Studio disconnected and the live went offline. Oh, here, I think it's refreshing.
Okay.
Okay.
Sorry
It's
for the...
disconnected. I'm sorry.
Are we good?
We're good.
Okay. And everybody, would you just let Megan know that we're good and you can hear everything? Because this is really, really, really critical information I want to make sure that you got. You good? We're good?
Yeah.
Okay. All right. So, at any rate, at some point, all gaps get filled. It does not matter when they were created. And that means that as far as nominal fiat price is concerned, that the next most likely outcome is for it to, in pretty short order, go up to about 1550. Now, look, this isn't a trade. So quite honestly, I don't really care where spot goes, but I know that that's what you guys look at, and I know that you put merit or value in this. So what this is really telling you, I mean, we've been watching the central banks buy gold. I want to take you and show you where the 1% have been buying that gold, because really the next level is for us to go and break out of the cup that started back in 2011 at about 1900 in nominal dollars, still way, way, way below the 10,000 or more in nominal dollars. That reflects the true value, the fundamental value of a price of gold. So you know I always tell you that you should look at what the smartest guys in the room are doing for themselves. And the central banks are buying gold. We know that globally. They are going hand over fist. I also want to keep in mind, and I'm sorry I should have brought this up in the beginning, but I didn't, because we were talking about the oil patch and how there is a conflict that is erupting right now between Iran and the U.S. And after that broadcast, Iran shot down a U.S. drone. Maybe it was by accident. Maybe all of this is by happenstance or accident. But in my personal experience, when I've looked at the history of everything, a lot of times crises are created to justify or hide the next move. And always, 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 in every single currency reset going to the next level of that reset, war is always part of it. We were within 10 minutes of a major escalation on war, and President Trump pulled the plug on retaliating from that drone strike within 10 minutes of the retaliation actually happening. 10 minutes. So we were almost maybe entering World War III today, but for a 10-minute window. It's not surprising that you're seeing spot gold break out, because honestly, this is a flight to safety. And the geopolitical risks, I don't think I've ever seen them a whole lot higher than we see them today. Whether it's the Middle East, or it's China, or it's Europe, or it's Italy, which is a conversation we're going to have in the future. But beyond that, I think we need to see what the elite, not the central banks, we've seen that, but what the elite do for themselves. Because in this area, these are key dates and rarities. These coins will start easily at 100 grand and go into the millions and millions of dollars. So it's only that 1% elite that can afford this. Okay? And you can see that they have accumulated, and there's a cup formation that's happening there now. But what's been happening since spot gold bottomed in 2015 is they've been buying. Shocker, shocker. They knew when the central banks were going to flood the system with money that was going to push the stock markets up. And now they're repositioning into the gold market, but in the most private way that you can hold it. Because if you've got a coin and it's worth, say, $8 million, You can put that in your pocket. You can go anywhere in the world with that coin, and you can move a whole lot of wealth in an itty bitty tiny package. I think I even have some $1 in here if they're rare enough, in an itty bitty teeny package that is basically invisible, and you can take your wealth with you. But I want to show you what I buy myself for growth. This is what I do with the growth part of my portfolio, which is still in the same category, but frankly, substantially less. I mean, we're only talking about a few $1,000 as compared to, $8 million or $100,000 even. And that's been creating both a short-term and a longer-term cup formation. So an accumulation pattern. Because when I want to put my wealth somewhere, and I am not a short-term trader, everybody knows that. That is not what I look at. I am far more strategic. That's why I created the strategy for myself. And I am always looking for, first, what is the long-term positive trend? And when you see higher and higher lows, you know you're in a positive trend. It's just that simple. Whereas the fiat products, you can watch the stock market go up, but what they're made from, dollars, in terms of purchasing power, that is going down. And every time a central bank says we need more inflation, what they're actually telling you is that they are forcing it down even more. And that's what all this money printing does. So you've got the central banks flying into bullion gold and some of the regular banks flying to the safety of silver. You've got the elite, 1% elite, building their position in the very, very expensive collectible coins. And in this area, they're the lowest premiums. Let me show you why I say, when I want growth, after I've determined the long-term positive trend, what I am actually looking at is where's the biggest bargain? Where is it? If I want growth, I want the biggest bargain because I like to buy low so that I can sell high. This is not rocket science. And in that case, what I have to look for is the most unloved trade, period, end of discussion. What's the most unloved trade? Because if I'm in a long-term positive trend, which I know I am, then I want to really get the biggest bang for my buck. Now, you know why you saw a spot go from $13.60 to over $1,400 like that? It's like holding your hand on a spring. That price has been suppressed at that level for a super long time, just like these collectible coins have. Because unlike spot, which is a digital market, this is a pure supply-demand market. Okay? It is. So when you remove your hand from a spring that you've been holding down, what happens? It shoots up. That's what it does. So if I can get the biggest bargain in an undervalued asset class that is in a long-term positive trend, I am most likely to get the best growth out of it. I just bought more last week. I bought more the week before. Boy, am I glad that I did. Because I think it should be pretty obvious that this is the most undervalued asset that is real money. It's gold. It's real money, regardless of its form. And it's the most private way to hold it. Now, everybody knows that I don't doubt, but that if they can't accomplish what they need with an invisible confiscation, like inflation, invisibly robs you of any fiat money wealth that you choose to try and hold on to. Okay, so this is real money. And when this shifts and we get that big pop when they do the reset, so we're not there yet. This is still the biggest bargain in the asset class. You can go ahead and look at this. Severely unloved. I love it. Come on, market, hate it more so I can accumulate more at bargain levels, because and there's no doubt in my mind, history has told us over and over and over and over and over again. My Uncle Al, with safes full of these collectible coins, though they weren't slabbed at that time, in 1964, when it was illegal to hold more than 5 ounces. I can't guarantee you one way or the other whether they're going to do an overt confiscation of gold or they're not. But I want to make sure that I can hold mine and use it in the normal marketplace. So I want to hold mine no matter what happens, so that I can convert this into income producing assets when all of this overvaluation is out of them. That's called buying low and selling high. And I'm telling you, these are physical. There's a finite number of them. And we saw, once they go off the market, I'm not selling mine. When they go off the market, they're gone. They can't push a button and create any more of these, especially the ones that were created prior to 1933. What are you going to do? Because this market, yeah, it's going to go up more. We're in final melt-up phase. And so a lot of people hear me say that and they go, oh man, well, man, I'll put money in the stock market because Lynette says it's going to melt up. But you're not going to be able to get out. It is a scam. I'm going to show you, because I've been gathering all of this data, what's really happening in these melt-up markets. And I've shown you before, but I'm going to show you again how the insiders that understand what's going on, they're getting out, they're taking their money off the table, and they're probably buying these. What do you think you should be doing? And I'm telling you, we're running out of time. We are absolutely running out of time. We were within 10 minutes. I'm not exaggerating. Turn on CNBC or Bloomberg. I'm pretty sure they're talking about within 10 minutes, we might have been in World War III. They're going to use that along with distracting you. Look at everything's fine. Look at the markets are going higher. This is where you want to keep your wealth. This is where you want to put more wealth. It's a lie. Don't believe them. I show you the truth. That's my job. That's what I'm committed to do. That's what I have been groomed to do. Thank goodness I was a banker and a stockbroker. I understand this lie, and I was there in 1987. We are now in the most expensive stock market in history, and is it going to keep going up? Probably. They just said, whew, we are going to just give you as much of that money, free money drug as you want. And what does that do? It destroys the underlying value of what you're buying. It dilutes it. This cannot be destroyed. 6,000 years of history. This cannot be destroyed. And it has the broadest base of buyer. So you'll always be able to convert it into any currency, any good, or any service. The same is not true for fiat money, and we're coming to an end. Get ready, people. Get ready. This is what I see. This is what I know. And this is what I'm doing for myself. Physical, metals, barterable. Do it. We're here. We are ready. I told everybody, get geared up. If you have any questions, then you give us a call. I've got a whole team of really, and if anybody's called in, they know, very intelligent precious metals consultants and strategy specialists to help you survive what we're already in the midst of going through, and maybe even get prepared to thrive through it on the other end.